somebody has an idea that everyone agrees with, I start naturally thinking about the other side of it. I think in stock market terms, because like a lot of money has left the stock market, you know, it's gone on to other things, and because of that, you don't get price changes. So if you have a discrepancy, you've identified something that's cheap, and you bought it, you don't have the force of the market there necessarily to close that gap anymore. I think you're more reliant on corporate actions, takeovers, and those things. That's business. That takes a lot longer to happen than just somebody decides. You know, the forces of the market decide that that is good, and they run after it and push the price up, and you sell it. Now you're more often than not waiting for a business to say, oh, rather than build it, we can just buy it at a cheap price and a relatively cheap price, so that takes longer, right? It's business. It has to be thought through. Agreements have to be signed. Negotiations have to take place. Blah blah blah.
Blah blah blah. So you say money's leaving the market. Where's it going?
Private equity, real estate, infrastructure, all the things that have. So some of these things provide steady state cash flows, and people are afraid of cyclical things, or have been, and so they've rushed into things that have steady state cash flow streams, and they've pushed them up where the prices make them, I think, unattractive investments. And a lot of money has gone into private equity, where the time frames are longer, and where you don't have a gyrating stock price every minute to remind you and make you feel up and down kind of thing. It's just you put some money into the business, and you try to improve the business, and then ultimately sell the business at a higher price. It's the same thing, but you don't deal with, you have no liquidity, so you don't deal with minute by minute bid and offer prices. And you see that behavior even with big pension funds, a preference for private equity over public markets, and I think it's driven by that very thing, that they're just uncomfortable with volatility. It's not to say that if your private business or your piece of real estate was in a public had a market, had a medium of exchange, immediate exchange, that you would see the same thing. You would see prices changing all the time. I was actually quite surprised that one of the big provincial pension funds seemed to be moving their money out of public market equities, when I thought many of them were cheap, into private equity, which I think has attracted a lot of money. And so, when there's lots of competition for deals, they tend to be overpriced. I was surprised that they did that, and they seemed to use that was their rationale, getting away from volatility and fluctuating asset prices to things that didn't fluctuate. This is nonsensical, but a lot of things are.